Samco has moved into an algo-based, rule-based investing model. I wanted to understand from a fund management perspective, what are the key aspects that you look into when you're running a rule or an algo for a model?
See, the key to a rule-based investing is the discipline of rule-based investing. What do I mean by this is that the way I was thinking in 2015 and the way I am thinking in 2025, based on which I am buying and selling stock, is it the same? Yes, to get that answer, because we human beings go through so much of emotions, the same thought process doesn't apply in different time frame. Now in a rule based investing, you will get that same discipline and same consistency. That's why rule based investing. Now if I have to further simplify and explain it, there are 4 key ingredients of rule based investing, which is what to buy, when to buy, how much to buy, and when to sell. Now till the time I don't answer all of this through the algorithm itself, I am bringing a lot of subjectivity into the fund management scenario. Now what we have done is, because we are feeding the kind of rules that we want to apply for the investment over a long period of time, and particularly momentum as a factor, as the style of investing, it is even more important that we stick to the rule based investing. Because what to buy, a lot of us know at many point of time, but when to buy, how much to buy, and when to sell, the other 3 key parameters which completes your entire will of 25% each, makes it 100%. Now all that 4 ingredients are the key thing that we are, that is what we like about the algorithmic approach of the fund management, and that is what brings you the discipline, so that 2015, 2025 and even 2035 will be at the same thought process and will give you that consistent output over a long period of time.
So Viraj, what you summarize, the 4 key aspects, which is what to buy, when to buy, how much to buy, and when to sell. This was more coming in from a fund management perspective.
Correct.
But if I as a partner would want to implement something similar for my client's portfolio, how should I think about it?
Very important, and it's one of the most fundamental questions that we can actually work upon together. So when to buy, what to buy, how much to buy, and when to sell. If I give you a science of that, so that you can do the right asset allocation for your client at the right point of time, the major challenge of the distributor will be solved according
Absolutely.
to.
Absolutely.
So let's come to the first part of the ingredient, what to buy. So we will give you a matrix of all my schemes, and I will explain you the risk and return profile of each of the opportunities that we are giving you, the schemes that we are offering you, and also explain you the kind of risk that is associated with the return of that client, and give you a science as to at what market level you should be getting into that particular scheme depending on the client's risk and return parameter. So let me give you an example. So there is something called as EMOSI that we have developed, EMOSI, Equity Margin of Safety Index. If you go to www.samcomf.com/EMOSI, you will get a number every night between 0 to 200. Last week it was close to 106. 100 being the fair value. The higher the number goes above 100 are the levels where you should be investing into the market, and the lower the number is, below 100, shows you that the market are in an elevated level. You should rather take a cautious approach, or maybe even look at doing profit booking. Now this is about when to buy. Now comes how much to buy. You should always allocate the right percentage towards a particular style. So now when we are talking about Samco, we are talking about momentum as a style. At this point of time, at this juncture, you should not have more than 20% allocation of any client to momentum as a style, be it active, be it passive, through various ways, whatever form of momentum you are selecting for your client. The ideal allocation at this point of time, as on today should not be more than 20%.
Understood.
So what to buy is understood, when to buy is understood through emosi, how much to buy is understood. Now if you understand all these things and understand emosi in detail, when to sell can also be understood through the same emosi level. But at least if we are not doing profit booking, let's say if the emosi levels are below 100, rather than doing lump sum at that point of time, we should actually take an STP or SIP route. And when the emosi levels are above 100, we should actually be looking at lump sum approach, then an SIP and STP approach. But for a new customer which is coming into your office and telling you that this is my 1 crore check and I want to get started, I want to get invested, and you do the right asset allocation for them, if I was allocating some of the money towards the momentum style, I will first ask him, what is your time horizon? Is it below 3 years? Is it 3 to 5 years? Or is it above 5 years? This is the first check that I will do for him. Once I get that answer in place, I will second ask him, what is the risk and what is the return that you are expecting out of this particular investing? If this risk and return parameter is done in this grading format, then you have all the four things answered as to when you should buy, which scheme you should be buying, how much you should be buying, and when you should be going aggressive in SIP or STP or a lump sum model.
That's a very, very elaborated answer, but this was the answer that we were looking for, because it gives us a perspective as a partner when we are doing asset allocation for a client. How should we go about it? These 4 metrics that you talk about, what to buy, when to buy, and how much to buy, and when to sell, using the framework that you talked about, the example that you took, as well as when you talked about emosi, will help us as partners to do the right allocation across all our clients. Thanks a lot for that answer. That was really, really elaborative.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.